Hello traders, welcome to your daily market update for Friday the 15th of May. Overnight we've seen a fairly subdued trading session as we've seen public holidays in Europe, and the market was remaining subdued throughout the European session, and it continued on to flow into the US session where we had some data drop in, and as you can see here the jobless claims improved. It's the lowest level they've seen in a long time, but we did see a big fall in producer price index, and that did weigh down on the US dollar overall. That will continue to weigh on the US dollar as we lead into the weekend, and we did see a fall in house prices in Canada. That data was ultimately ignored by the market as the focus remains on the US dollar and the lack of interest that has been shown. We're starting to price in the reduced chances of an interest rate hike in September, and the market moving forward is going to take some convincing. We're going to need to see a continual string, an uptick of data before we see a bounce in the US dollar, and a bounce that is sustainable. So a lot of punters on the weekend will be continuing to sell the US dollar. And next week we have a new list of data coming out. Tonight, as you can see on the calendar, we don't have a lot. We do have Bank of Canada Governor Kuroda's speech. That will affect the yen, but it really depends on what he says going forward. We may remain quiet. The rest of the docket is quite bare. You can see that we do have the Empire State Manufacturing Index, and it is expected to improve. But overall, the docket won't provide a lot of activity. It could actually be a very quiet and thinly traded market, as we did see that yesterday, and it could flow on to today as we move into the weekend, as prices are starting to hit some key levels. So we could consolidate around those key levels before the weekend, and the market turns to a new week. As you can see here, the US dollar has broken support, and it is in free fall mode. The last three trading sessions, it has picked up the momentum of falls that we did see earlier in May. And we have, if I zoom out for you, you can see that the long-term uptrend has been broken. We did fall through it, come back and test the back of it, and we're continuing lower. If I move to a monthly chart, you will notice that if I pull a Fibonacci from the start of this rally, where the market really started to get excited about an interest rate rise, and that led to the start of the bullish move. If I was to pull a Fibonacci from the beginning of this low to the highs that we've seen recently and pull that across, you can see that the market is pulling back to the Fib 61.8 level, and there is potential there for technical support in the short term, at least, depending on how the fundamentals go. And if it breaks through that, well, then I'll be definitely eyeing off the Fib 50 level, as that also provides historical support and resistance. You can see resistance over here back in 2009, and it could offer support as we move forward. It's going to take some time before we come down and test those levels, unless, of course, selling continues to roll out at the current pace. But I think that these two levels are the key on the longer term to keep an eye on for a bounce, as at some point the US is going to look to tighten policy, and the US dollar will become back in favour. So it isn't all doom and gloom, but this pullback is healthy. As you can see, that we have had a very large rally from the lows down near 77, 78 cents, and the highs exceeding the 100. So a pullback is justified, and the market will renew its favoritism, I'm sure, in the US dollar once we get closer towards better data and certainty of an interest rate rise. If we're moving over to the charts, I'll start off with the usual New Zealand versus the USD, and you can see here that we did flame out. We have rallied, and after a really big move yesterday, it is struggling to make any higher, and we did close lower than we opened. So that is a sign that we have started to run out of momentum on the move. The move was quite baffling to myself, as we didn't really have any good news coming out of New Zealand to justify the big bounce. But I think the news was also the price action, I should say, is also moved on the back of the US dollar assisting the price action here. But we have stalled, and we could be starting to look for some lower moves. You can see here that we still have the breakout of the rising channel. I'm keeping an eye on that, and we'll see how the price action proceeds as the trading session rolls out, but I am looking for some further weakness. Similar story for the Australian dollar. As you can see, we did flame out at 81.6 cents, and we could be looking for some moves lower. It didn't actually get above to test the 83-cent range, and I think that any moves up towards the 83 cent is an extended move on the Australian dollar, as the fundamentals don't support such a high currency. And at some point, I think that we are going to get some lower price action. If we have a look on the weekly chart, we have recently seen since September some pretty dramatic falls, and it's only natural for the Australian dollar to provide a healthy correction. And the correction may stall around this point before we start to look for some lower moves, as the Australian economy isn't really improving and it doesn't justify a higher price. If we have a look at the Great British Pound, you can see here that the rally has exceeded 8 continuous days. Back in 2010, we did see 10 continual days of rallies, and that was the record. But as we are now approaching a resistance level historically, if I zoom out for you, you can see that we do have a resistance level here at $1.58, and it seems that the market may start to stall around this point. So it's going to be interesting to see if we can break the 10 consecutive days of rallies. But for now, I think that we may find it difficult to do so as we are approaching this resistance level. If we have a quick look at the euro, you can see the euro is a lot stronger, and it did brush off comments overnight that the Greek officials were suggesting that they may even ask for further extensions as they are running out of money fast. Sure, they made the recent payment on their debt, but we all know that they don't have enough money to make further payments. So the negative comments were ignored by the market, and the euro continued to rally as the US dollar fall. And we are approaching a resistance level that I think is key for the market, $1.14.5. Any breaks above this and sustainable above this at the closing of today would indicate that the euro does want to go higher. However, I am interested to see whether we start to stall. So right now, it looks like the New Zealand has started to stall along with the Australian dollar. The Great British Pound is testing a key resistance level, and likewise the euro. So we could all be seeing these key levels bring to an end the extraordinary rallies that we've seen in the coming sessions. If we have a look at the US versus the Japanese yen, it's still within the sideways range. Nothing's changing there, and I don't think anything is going to change until we do get some sort of direction or firm direction from the Fed as to the likelihood of an interest rate rise this year. That will instill some confidence back into the market, and with that, the US dollar will become favourable, and I'm sure that a breakout of this range is imminent. The range has been in play now for quite some time, since November, and whenever we see a tight range so tight for such a long period of time, when we do get a breakout, it's usually spectacular, and it's one that can happen for a long distance. And usually the run up into a consolidation is the equivalent to the expected breakout of a consolidation. And if that reigns true, we could see that the US versus the yen push into the $1.30 area if the interest rate rise do come to fruition this year. Well, that's it from me today. It looks like we could have a quiet session. Don't get too excited. I think scalping will be the best play for today, as trends are going to be few and far between in the longer term. Keep an eye on those major resistance and support levels I mentioned, and I'll be back again next week. So until then, trade well.